Hi everyone, welcome to my YouTube channel. My name is Tabitha. Today we are going to talk about capital gain account strategy. So this is one of the account that I make some change from. So I want to really organize and put it into practice so I can see the actual gain that I get and whether it is worth it or not. So the plan is for the whole year and we're going to go through it quarterly for 4 quarters. So this is the topic of today, the capital gain account, and what are the strategies that I'm using to build the account. So if you're new to this channel, please subscribe for more videos and I will appreciate your support. So let's get into the agendas of these videos. So the agendas of these videos states factors that you consider when you are picking the stocks to put into the capital gain account. And what are the stocks that you're putting into this account, and what is the table illustration? What is the plan? So how much money do you put into this account, and how much dividend account that how much dividend are you going to hand after 3 months, and what is the total, how much commission did you paid, and whether it's worth it when you make your calculation and see the difference. So let's go ahead and look at the factors that you consider before you pick stocks to put into capital gain account. So most of the time people look at the general health of a company. So are this company doing good leadership skill? Do they have good leadership team that is really taking the company ahead and making big growth or stuff like that? Is the industry that you are investing in have a future growth? Are they going to do well in the future? You can also consider like commanding market shares. Do they have like that strong base as compared to other companies? There are so many factors that you can have to consider when you are picking those stocks, but we are looking at few of them today. So when we look at those factors, we have more coming from this slide. So we look at the whole overall of, do they have strong sales growth, and what are the businesses that they are doing, what are the services that they give, what are some of the future plans they have for the company. So do they have the large target market? So what is really going to make them fail or succeed in the market? So those are the factors, few factors that we are considering today. So maybe we might add more in the future as we learned this year. So when we look at the stocks that we are supposed to put our money in, because we are focusing in the long term, stable growth, like that gradual, slow growth. We are not in to make a home run or maybe hurt ourselves when we lose our money. So we are looking at the bank stocks. So based on my experience and how I've been working with the bank stocks, not all bank stocks are good for capital gain because some of them just are stagnant. They have stagnant price. They never move. They stay there for a while. So you're putting it in to gain some change every week or every month, and then you are going to waste your money by holding them into the stocks that has price that doesn't move. So if I look at the 5 big banks in Canada, so the one that I pick is TD Banks because most of the time the price is always moving, and then you can now pick on those swing every time it's like moving. You can now take advantage and buy low, sell high. So like today, the price was 81.75 cents, but previously it was 75.89 cents. there was a time that it went to $87. So let's say, for example, you had that opportunity of buying at 75. You will be making a profit here of about 12, about $11 capital gain, right? So you get that 11% growth of your account in a very short period of time. And in the meantime, before you get the increase, capital gain increase or capital appreciation, so you can also continue to get dividend every quarter as you wait for that growth. So the dividend that TD pays is about $1.02. So that's a good one if you have a big portfolio, so you can feel that you are earning something. And the strategy of business is like we always buy low and sell high. So look at here, if you had to buy here at 75, 89 cents, and then you can sell it when it's high, like, and make $11 per shares. So let's look at another bank stocks that I feel like it always fluctuating, and you can take advantage by using it to make capital gain. So that company is Bank of Montreal. So Bank of Montreal has also a fluctuating price. I have seen it in history and when we were starting investing in 2021, 2020. So the price can move from $70 to $150. Another time it could be $80, it could be $90. So it always moving, it's always on the move. So if you have your strategy in place, you can take advantage of the swing. The swing, you buy it when it's $70, you sell it when it's 150. If you buy it at $70 and all of a sudden it goes to 50, you still trust this company, so you will wait until it right back to 150. So that is strategy that I was talking about, the long-term strategy that you do not need to panic if the price goes the opposite way that you did not really expect. So if it goes down beyond what you bought it for, you wait, because in history, it has been like doing things like that. It always corrects itself. So BMO is also part of the dividend growth stocks. So if you look at here, the price now is $132.25, right? So, but previously it was 102. Let's say, for example, you had bought it here when it was 102. At this point now, you will be making a profit of $30 per share if you had to make it $30 per share. So if you had like maybe 50 shares, how much are you make already, right? 50 shares and times 30 is like $1,000, 500 for that profits, right? Okay, so it's really good. So those two bank stocks are the one that I put in the capital gain account, and I've already explained the fact that their prices are always moving, give you the opportunity of buying low and sell high. So now let's look at the other stocks, other industries. So the next thing that always come after bank stocks for me is the ETFs, the exchange traded funds. These are more diversified companies, diversified funds that are made up of many companies from different industry. So they are somehow more safer than even the individual stocks. But some of them hand in dividend monthly, others only had small minimum dividends. So, but can you also use them for growth and capital gains, capital appreciation? It also depends. So you look at the one that do not have stagnant price, the one that you see like every time the price is moving, those are the perfect one that you can use for capital gain account. So XEI have a very small dividend every month. So it's like 20 cents, 25 cents per share. So you get it every month. So in the main, but the price now is 35, which is at its highest. So it's at its highest. But if you had bought this share at 29.75, you will be making about almost 5% on your capital, on your shares per share. You make about 5%, right? So that is really good. So XEI, as you wait for the price to go back to the highest, you can continue getting your dividend every month. So which is really good. Make it like really more peaceful. You don't have need to panic. You just wait. If you're not earning capital gain, you're earning a dividend. So that's the beauty of this kind of stocks that I always choose to invest in. So now let's look at the next one, which is the VRE when it comes to the Canadian ETF. So Canadian ETF, the VRE, always have small dividend monthly. So, but can we use them for a capital gain account? So let's look at that VRE and how do we use it? Is the amount of fluctuating in the price of the VRE is that high, and then we can use it for capital gain account because it can change anytime. If we look at the current price, it's like $30, 47 per share. So dividend that you get here is very small, very small, which is like 5 cents per share for every month, right? So, but here, this is our focus because we are more into capital gain account. So we need to make little profit here and there. So here, if you had bought the shares at 25, at this point now you will be making almost $4 per share as a profit for investing in this account. So the strategy is long term, collect your dividend, wait for the capital gains, and when you get that opportunity of capital gain, you sell those shares and make the profit, right? And most of the time, use the retail equation like buy low, sell high. So we were expected to buy at $25.36, so that now today we can sell at 35.97. Okay. So now let's look at more companies. So I said before, like how you diversify is when you pick stocks from different companies, different industries, and they are stable companies. So you can now like really avoid risks because you're already diversified. Let's say, for example, you lose Enbridge, what do? You can still make out that money from these other industries because the whole system cannot just fail all at once. So that is another strategy that you have to keep in mind when you're investing. You have to diversify your portfolio. So when you look at the Enbridge, it's a energy stocks. So it's really something that is essential for us as human. We need like sewer, we need light, we need water, we need all those stuff. So when you look at this now, the price currently is 48.97.95, and if you were to buy at 42, you will be making around $6 per share now as a profit. Like it's like 6%. Who give 6%? There are no any financial institution that give you 6% for saving your money in their company. So, but if you understand your things and you know how to research, you know how to invest, you can invest by yourself and enjoy your 6% without even fighting with anyone, begging or doing what. So you can do it here. So, but in the meantime, as we wait for the price to go up, you can continue getting your dividend, which is 9 90 cents, 91 cents, or about 92 cents per shares. So these shares pay dividend quarterly. So if you own some good shares of Enbridge, you will be getting 91 cents per share of the Enbridge every quarter. So the first quarter we'll miss it here because we haven't really bought anything using Enbridge. So that is the for Enbridge. So what else? What other companies do I invest in? And based on my experience, what are some of the things that I think will fit a capital gain account? So capital gain account is something where you want to go and make some quick cash and leave, right? So you don't want a company that is stagnant, the price does not move and all those stuff. So Starbucks is like a coffee house and it's mostly traded in NASDAQ platform. So it's traded in US dollars. So if you want to buy to avoid losing money in terms of exchange, so you can really be careful and see when the US dollars has gone down and take advantage to buy more of the US dollars and then now come back and invest in the Starbucks. And then while we wait for the Starbucks to increase in price, we can enjoy getting dividend of 57 cents per share quarterly when we are invested in Starbucks. So when you look at here, if you buy it at 89 and 21 cents when the price was here, now at some point you can enjoy 115 at the price of 115. When you take the difference, you are like you have the possibilities of making 26% per share when you if you had invest in 89 when the price was at 89. So these are like some few stocks that I'm going to put on in my capital gain. This is something that I had done before and I saw it was very fruitful and I make some really good profit in using this strategy. So I'm now redoing it for 2024 because I have planned for doing something and I need money. So if I invest like 250, you have a probability of adding $100 maybe per month, but in 2 month time. So I want to build it again. So if you like this video, please subscribe for more videos. And so we continue, there's a table here. So this is how we're going to work on it, right? So we're not done yet. So this is, we will be stating the month, the name, the number of stocks, the stock we own, the commission, the dividend, unrealized gain, actual gain, capital. So why am I doing this table? It's just to really show me the actual. So what are we doing? Sometimes we say, oh, it's increased by $100, but how much dividend have you paid while buying and selling? So we have to see the clear picture and how much dividend have you earned throughout that time that you have been holding that stock. So we will expand the table a little bit later, but we want to add more sectors. Okay, so that is the end. And if you like this video, please subscribe for more videos and I will see you next time.